Yeah, this is the agenda. Then these are all the topics will be covered as part of this training. The overview of trade finance and the methods of payments in trade finance and different types of products in trade finance, and also the pre-shipment trade finance, post-shipment trade finance, forfeiting, factoring, guarantees, SPLCs, life cycle of trade finance products, trade documentation, SWIFT message, international commercial terms, Incoterms, you can also call it as Incoterms, and the regulations and the compliance, and the project experience in trade finance domain, which I have, and explain the process improvements which we have done as part of our projects and the end-to-end system we worked. Okay. The definition of the trade finance is the term trade finance means finance for trade. For any trade transaction, here should be a seller to sell the goods or services and a buyer who will buy the goods or services. And the various intermediaries such as banks, financial institutions facilitate these trade transactions by financing the trade. This is what the definition. But here in trade finance, the main parties of the trade finance is buyer and the seller. Okay, if it's between buyer and the seller, and they first enter into the sales contract, and they will decide whether they will go for a letter of credit or they'll go for documentary collections or the advance payments or the open accounts. They will decide, and based on that, they will ask which instrument is suitable for the transactions. Okay, that's the way they will decide it. And actually, the trade finance means it's a transaction between the buyer and the seller. But if something happens, then for suppose there are some means there is a payment method called advance payment. Advance payment where the buyer will pay the money first and the seller ship the goods later. Here, buyer is at risk, right? He may or may not get the goods, right? Yeah, and there is one more instrument called open accounts where it will be different. I mean, so the exporter will ship the goods first, then once buyer gets the goods, and he will pay the money to the exporter. Here, the exporter is at risk. In that case, then if some instrument should be, means some intermediary should give the assurance to the importer or the exporter about their transactions, then the banks and the financial institutions will come into the picture. These banks and financial institutions will facilitate these things in terms of letter of credits and documentary collections and the guarantees and the SPLCs. There are certain instruments we can use in trade finance to facilitate the buyer and the seller. That is the trade finance. We'll go to the methods of payments. The methods of payments is payment in advance, as I said, payment in advance, and the documentary credit, documentary collections, and the open accounts. Okay, we'll go one by one. Yeah, advance payment. The payment made in whole or in part by the importer in advance of the exporter shipping the goods. Okay, first one is the importer pays for the goods, and the exporter ship the goods to the importer. Okay, here is an exporter, here is an importer. Means he is paying money first to the exporter, later exporter is shipping the goods. Means here the importer is at risk. There is no banks involved here. They just send the money, and the importer is waiting for the goods. There is a risk at the importer. He may or may not get the goods, or he may get damaged goods, or he may get off of the goods, or the 75% of the goods, and the 25% of the goods is damaged while shipping the goods to the importer. That is the risk at the importer side. But in exporter, there is no risk because he is getting the money first. Now, after getting the money, only is shipping the goods to the importer. This is an advance payment, and here importer is at risk. Okay, and open accounts, it's quite opposite to the advance payment, where importer will get the goods first, and later he will pay the money to the exporter. Okay, here the exporter is at risk. He may or may not get the money because once he ship the goods to the importer, that is the risk at open accounts. Okay, Yeah, these kind of transactions will happen only if exporter importer knows very well, or an exporter and importer have a trust in between them. Then only these kind of transactions will happen. If there is no trust, certainly the exporter wants advance payment, then only he will ship the goods. It's a human tendency that if he get the money, then only he will ship the goods. An importer think that he will get the goods. He want to get the goods first, and then only he will pay the money. But in this case, open accounts are happening in the world. Means there are many transactions are happening in the open accounts because of the competition in the world. The sellers are giving. Means for suppose you can see the Amazon and the Flipkart where they are shipping the goods first and taking the money later. Cash on delivery, these things. Because of the competition, these sellers are offering the open accounts transactions to the customers. It's happening in the world. And the advance payment also, if for suppose there is only one seller in the world and the importer wants the goods, then definitely whatever the seller says, he has to listen. In these kind of situation, these payments will happen. Open accounts are happening because whenever he ship the goods, he'll also approach the bank, and he may ask for the loan or something from the banks, means providing the invoice or bill of exchange to the banks, and based on those things, nowadays banks are providing finance to the exporters also. And the third one is the letter of credit. It's a letter of credit is the most secured transaction in the trade finance. The letter of credit is an undertaking of a payment given by the importer bank to the exporter for a specified sum, provided the exporter ships out the goods and present the required compliant documents by a predetermined deadline. This is the definition of the letter of credit. There are few main parties involved in letter of credit. One is buyer, and the second one is the importer's bank, and then third one is the exporter's bank, and the fourth one is exporter. These are the main parties of the letter of credit. Here, a letter of credit means actually, here I'll tell you the parties first. First of all, as I said earlier, it's between seller and the buyer, right? They will enter into the sales contract first, and then they will decide the which transaction they want to go, which instrument they want to go. If they decided to go for the letter of credit, and then the importer will go to the importing bank and ask the importing bank to the issue the letter of credit. Here, importer will be there, and the importer's bank will be there. Importer's bank will be there, and the exporter's bank and the exporter will be there. Okay. Now we assume that they have decided to go for the letter of credit. Okay. And here in letter of credit, we'll call importer as an applicant. Okay. And the importer's bank, we'll call it as issuing bank. And the exporter's bank, we call it as advising bank, or negotiating bank, or nominating bank. Okay. And here the exporter, we call him as beneficiary. These are the terms we used in letter of credit. Okay. Yeah. Now we assume that they have decided to go for the letter of credit. In that case, then the letter of credit will start from the importer side. The importer will go to the issuing bank, and he will ask the issuing bank to issue a letter of credit. Guarantee means the main thing is here in letter of credit, this issuing bank will give the assurance to the exporter that if the documents are clean or compliant, then I will pay the money to I will pay the money to you. If importer is not able to pay it, that's kind of an assurance will be given to the exporter by the importer's bank. it will take the liability. The importing bank will take the liability, and they will pay it on behalf of importer in case if something happens. And also we need to keep in mind that the banks will deals with only the documents. If the documents are compliant, and then only they will release the funds. And here, one more thing I'll tell you: the letter of credit will follow the rules of UCP 600. UCP 600 is Uniform Customs and Practices for Documentary Credit. We also call letter of credit as documentary credit, and it will follow the rules of UCP 600. And if the letter of credit is subject to UCP 600, because UCP 600 has been introduced by International Chamber of Commerce in 1933, and with the publication number 600, and it has been revised 7 times. And the last version of the UCP 600, the last time it was revised in 2007. Okay, it is having 39 articles, and 39 rules and regulations have been introduced in this UCP 600. If the letter of credit is subject to UCP 600, then the buyer and the seller or the shipping company, everybody has to follow that UCP 600. There is no rule that the letter of credit has. We have importer, importing bank, exporter bank, and the exporter. And this is subject to, means if the letter of credit follows the UCP 600, and it should follow the UCP 600 rules and the guidelines which are there in the UCP 600. If they don't want to follow the UCP 600, they can just mention in the letter of credit saying that this is not subject to the UCP 600. Okay. This is the letter of credit flow. It will start from the importer to the exporter. Okay. The importer will go to the importing bank, and he will ask to issue the letter of credit on behalf of him to the exporter. Okay. And he will give the all instructions like what is amount of the LC, and whether that partial shipments are allowed or not, what is the expiry date, what are all the documents should be submitted, what are all the goods he is going to get from the exporter, and what are all the banks involved, and everything will be written in the letter of credit. Letter of credit in the form of MT 700. Okay. The importer will go to the importer's bank, right? He will ask to issue the letter of credit, and the issuing bank will issue MT 700. The SWIFT message, the communication between the banks in the letter of credit in the form of MT 7 series message for the letter of credits. If the importer wants to send the letter of credit, he has to send the letter of credit in the MT 700 format. It's an authenticated message. If you are getting the MT 700, means it's a letter of credit. Once importing bank get the request from the applicant, he will create the MT 700, and the importing bank also see whether I can issue the LC or not. They will check everything, whatever the information applicant has given, and if they agrees with the terms and conditions, then only they'll go and issue the letter of credit, because here the issuing bank is taking that liability on behalf of applicant. If he is not paying, then as an issuing bank, he has to pay if everything is clean. We need to keep in that mind, right? If everything is clean, everything means the documents are complying with the letter of credit and the UCP 600. If it is subject to UCP 600, if everything is clean and clear, then importing bank has to pay the money to the exporter. In case we have two types of payments in letter of credit. One is sight, another one is usance. Sight means whenever issue bank get the documents, if everything is fine, means after seeing the documents, if everything is fine, and then they will debit the customer account and pay to the exporter bank. This is like this is a sight, means whenever issue bank get the documents, and if everything is clean, the issue bank has to pay. The usance is like that. It will be paid in the future date. Yeah, for suppose letter of credit is having a payment term called 60 days or 120 days after shipment date. Like this, there will be shipment date or LC expiry date. Like this, if the letter of credit is having payment terms as like this, whenever issuing bank gets the documents, and what they will do, they will send the acceptance message to the exporting bank saying that we have accepted the documents and we are going to pay on so and so date. The maturity date will be given to the exporters bank. Here, it's an issuing import letter of credit site, whatever we discussed now, right? Here, the example is the Boeing, the sales contract of sale of aircraft, and the SpiceJet is an importer, and this is an issuing bank, and it's an advising bank. It's a the basic thing is means the issuing bank, the SpiceJet, the importer will go to the issuing bank, and it will go to the advising bank. The advising bank will advise that letter of credit to the exporter. Yeah, there are applicant approaches the issuing bank for the issuing of LC. Issuing bank provides them with the LC application form, and the applicant fills out that form as per sales contract and hand over it to the issuing bank. And the bank check the application for workability as per the ECP, ISBP, and the bank policy and the applicable rules if that is applicable to ECP or ISBP. And the issuing bank, upon complying with the above, will issue the credit to the advising bank. Okay. And again, advising letter of credit. Here, the advising means once advising bank get the letter of credit, issuing bank issues the LC to its correspondent bank or the advising bank opted by the applicant. And upon receipt of the credit, advising bank check the authenticity of the credit, and the advising bank check the credit for workability as per these ECP rules, and advising that bank collects the advising commission and advises credit to the beneficiary. Beneficiary means the exporter. Here, the beneficiary present the documents to the negotiating or nominating as per the LC requirement. Exporter bank check the terms and conditions of the LC and check the documents for the compliance of the documents with the LC conditions. And the exporter bank forward the documents to the issuing bank for payment. The payment after sending the documents, exporter bank present the documents to the issuing bank as presented by the exporter. Okay. Issuing bank check the terms and conditions of the LC and check the documents for the compliance of the documents with LC conditions and UCP and these rules. If the documents comply with the above terms and conditions, issuing bank makes the payment as per the instructions of the exporter bank. And the exporter bank will give the payment instructions, how it will be paid, and these things. Okay. And the usance case we discussed, right? The applicant approaches the issuing bank for the usance. Issuing bank provides the LC. And these things will be common. And the usance, it will be paid in the future. And here we can also see few other banks involved in the letter of credit. Apart from issuing bank, exporting bank, there will be a second advising bank and the reimbursement bank, and also we can transfer bank. I'll explain clearly later. And the second advising bank means if suppose exporters bank is after checking the letter of credit, if they don't want to advise the letter of credit, and they'll advise to some other bank and ask them to advise that letter of credit to the exporter bank. In that case, second advising bank will come into the picture. Okay. And the reimbursement bank means sometimes these two banks may not have the account relationship, issuing bank and the exporters bank. In that case, what issuing bank will means while sending the MT 700 itself, they will give some clause over there, the reimbursement bank. They will provide the reimbursement bank name over there. And once everything is done, and the exporting, this issuing bank will send that reimbursement authorization to the reimbursement bank, and once they get the reimbursement claim from the exporter bank, it will pay to the exporter bank. If there is no account relationship, and but will it will also go in proper format, because
Right.
if everything documents are clean, issuing bank will send MT 740. MT 740 is reimbursement authorization. It's giving reimbursement authorization to the reimbursement bank, and he will mention in the reimbursement authorization about the exporting bank name and the amount what needs to be paid and the maturity date, and everything will be mentioned in the reimbursement authorization. This bank, reimbursement bank, is doing this service, right? For that, these people will charge something. That will
Okay.
also mentioned here, whether the reimbursement charges are on account of issuing bank, or on account of importer, or on account of exporter.